Hello, good afternoon. Welcome to the webinar with me, Elliot Purdy. I'm the UK manager for easy-forex, and today I'll be showing you the platform, okay, how to open, close, modify deals, what Forex is about, what you should be looking out for when you're trading, and we'll show you around some of the charting and research analysis sections of the website as well. If you have any questions, when you go to webinar dashboard, there's an option there to put in questions. Okay, anything you ask, we'll try and answer as you go through. If not, you can ask me at the end. If you're listening to recording, obviously, if you have any questions, do send an email or give us a call. Firstly, Forex it does carry risk. Okay, so always take care when you're investing, and please always get as much education before you start as possible. The other thing is anything I say during this webinar cannot be taken as advice. Okay, it's purely educational only. Let's get started then. First of all, we're looking at the platform now. This is the web-based platform. This is what we're going to be going through today. I'll show you a brief look of MT4 later so you can see what it's about. But essentially, this is what we're looking at. Once you've logged in to the site, okay, to find this page, if it's not on there automatically, you normally always have a red button somewhere on the screen where you can log in, which says sort of trading zone, something like that, or go to trade. If you're on the home page, okay, you can actually do it by going to trading platforms, web trading, and then you'll see the green button down here, go to web trading, okay, and you'll find yourself at the platform. What exactly are we doing then when we're trading? There are several things you can trade: foreign exchange, commodities such as gold, silver, and oil, stock indices such as the FTSE 100, and we even have options available as well. But in terms of what we'll be talking about today, we'll be concentrating on FX. Okay, so we'll be showing you how to actually calculate your profits and losses and how to actually put your opinion into place when you go to trade. What are we doing then? So we're trying to make money by predicting the ups and downs of the foreign exchange markets. Okay, everyone has probably traded FX at some point in their lifetime. When you go on holiday and you make an exchange, okay, for your pounds, if you buy dollars, if you're going to America, or euros, if you're going to Europe or anything else, you're actually making an FX trade at that point. Okay, and the rate at that time will dictate how much you get of the foreign currency for your pounds. Now, what people actually do every day is buy and sell foreign currency. Okay, they'll buy it and wait for the exchange rate to go in their favor, or they'll sell it and wait for the exchange rate to go in their favor before actually getting out of the trade. And it's possible to actually make money that way. I know a few of the watchers today actually already started trading, so have a basic understanding of that anyway. When we're looking at the foreign exchange rate, for example, euro against the US dollar, which I'm hovering over here in the currency table to the left, the currency table gives you a list of all the popular currencies as a default, but if you want to customize that, there's a little cross here where you can click and customize your currencies and add other ones into it. The most popular traded pair is the euro against the US dollar. They are the two biggest economies in the world. And the exchange rate here tells you how many of the second currency, known as the counter or the quote, it's the US dollar in this instance, how many US dollars I get for one of the base currency, and that's the euro in this instance. So 1 euro buys me 1.3665 US dollars. Okay, if we have, let's say, 1,000 euros, then I would be able to buy $1,366 and so forth. There are two prices here, a buy price and a sell price. Just like when you go and sell your car down to the local car salesman, okay, he's going to buy it off you for one price and then he'll sell it on for another. He essentially will be profiting between the difference between the two. We as a broker, this is how we make our profit between the two prices. Unfortunately, we're not on the same margins as your local car dealership, but we do make a tiny bit. FX is extremely liquid, extremely competitive market. So the difference between the two prices are extremely small, and we actually measure them in terms of what we call pips. Okay, pip stands for percentage in point. It's 1% of 1%, and you're normally looking at the 4th decimal place for most of the major currency pairs, and a change in 1 unit in a 4th decimal place will be called a change of 1 pip. So at the moment, the sell price here you can see is 1.3660, just changed a bit, but imagine it was 1.3660 and the buy price would be 1.3663. The difference between the two, and that stays the same 24 hours a day, is 3 pips. Okay, so we're going down to the 4th decimal place. Difference between these two is 3 pips. Okay, if you have premium accounts, you might have it even smaller, maybe down as low as 2 pips. when you're trading, you normally measure your profits and losses in terms of pips. So if you're looking to buy, we think that euro US dollar is going to rise, we might decide that it's going to go up to 1.3683. That'd be an increase of 20 pips. And this is how most people discuss it. If you go onto forums or if you talk about how many pips you got in a trade, this tends to be the common language used to show how profitable you are. Okay, because you can trade in lots of different sizes and you might have made a decent win, but if you're trading in a huge size, it might not actually mean that you've done very well. Okay, it's the number of pips really that prove how successful a trader you are at the end of the day. So we've got a buy price and a sell price. First of all, the first thing we need to decide is what we're going to trade or what we're going to look at. Let's stick with the euro against the US dollar. Okay, this is the exchange rate, as we've noted, that tells you how many US dollars you get for 1 euro. First thing I normally do is look at the chart. I've got the chart open on a different tab here. What I did was I went to the research and analysis. I right-click on my mouse and I opened a new tab, and it gives me a chart in the new tab here. Automatically it goes to euro US dollar. That's the default. If you want to choose another pair to look at, hover over choose instrument and then choose what you want to view. I'm looking at euro US dollar here. Also, if I wanted it bigger, I could detach the chart. It would be a bit bigger, and I could even expand so that it took up the whole of my screen and I could see it much better visually there. I'm going to stick to the small one for now. On the chart, I'll normally start from a longer time frame, daily for example, to see what's going on. You can see we're in an uptrend pretty much. The daily chart doesn't mean that the whole chart is 1 day's worth of movement of the price up and down. That would be a lot of movement. What it means is that each one of these little green or red, what we call candles, shows the price movement over 1 day. Okay, so this is actually many, many, many days going back to end of May earlier this year. What has the price been doing since then? As you can see, it's pretty much in an uptrend. So if we think that, let's say for example, the price has been coming up significantly, and I think that even though it's just turning around, the next point should be an upward movement. Okay, let's say for example I think that. I might think that, I might not in real life, but we're using it as an example. I think that it's going to rise next, so I would therefore want to actually be buying euros. Because if I buy euros and I'm holding euros, as the exchange rate rises, the euros that I'm holding are worth more dollars, and that means a profit to me. So what actually happens when we make that trade, I can go to my currency table, I click on buy. The buy and the sell in the currency table refer to the base currency, so they're referring to the euro. So if I click on buy here, I'm going to be buying euros. If I clicked on sold, I'd be selling euros. So when I click on buying euros, I'm buying them. Now every time you buy something in life, you have to give something up, right? You can't just say I bought something, I bought a newspaper from the shop. You would have paid for it. You would have sold, let's say it's £1 newspaper, you would have sold £1 and bought a newspaper. So there's always an exchange every time you buy something. But with FX, we get to choose what we buy it with. Now normally, if you think the euro is going to do well, you'd buy euros. But what would you choose to sell it against? Well, you choose to sell it against a currency that you thought was not going to do very well. In this case, we're thinking the US dollar is not going to have a good time against the euro, so we'd actually be buying euros and selling US dollars. You might say, well, I don't have any US dollars to sell, Jay, so how am I going to do that? This is the beauty of leverage trading. We're going to borrow some US dollars, just like they do at the big investment banks. We're going to borrow some money, we're going to play with it, and we're going to make a profit with it, hopefully. So I'm going to borrow some US dollars, just enough to buy, let's say, for example, 10,000 euros. Now, if you're very good at maths, you'll work out that to buy 10,000 euros, we'll need 13,664 US dollars. Okay, so I'm going to sort of borrow that amount until the end of the trade, and I'm going to buy 10,000 euros. And after I bought that trade, the market will be moving up and down. If it moves up, my 10,000 euros that I've got in my pocket, in theory, are going to increase in value in dollars. They're worth more and more dollars, so when I close the trade, I give those euros back. I'll have more dollars than the 13,664 that I started with, and that will be my profit. Because I borrowed that much, I can pay that back easily, and I'll have a little bit left over to go and spend. All right, so that's what we're going to do. I think it's going to go up, so I'm picking a direction. I'm buying euros and selling US dollars. I'm buying the base currency euros, selling US dollars, the quote currency. That's the correct direction. The next thing you want to choose is the amount to trade. Don't get scared by this number. You're not actually risking this number. However, you are going to make money or lose money as if you really had that many euros. Now remember, foreign exchange prices, we're in and out normally within the same day, and the movements in terms of percentage are actually very small. So a 10,000 euro trade is, you're probably looking to make something like $20, $30 or up to $50 from the trade, and losing, putting at risk something similar. All right, so we're not talking about huge amounts of money. Even though it's a 10,000 euro trade, we're still only looking at what we'd call $1 per pip. Okay, so with a 10,000 euro trade, each time the price moves up or down by 1 pip, so that's the fourth decimal place going up or down 1, we'll be profiting or losing $1. Okay, and we'll see that on the running profit and loss. So 10,000 euros is the trade size that I'm choosing. I could go bigger, let's say 20,000 euros. That would be twice as much risk, so each time the trade moved, I'll be making or losing twice as much, so $2 per pip. Okay, so as you get a bit better and you get a bit more ballsy, okay, or you see your strategy is working, then you can up the trade size. As a beginner, I'd definitely stick to something small. Should be something meaningful, okay, but small in terms of your capital you have in the account, so that you're not risking more than, say, 5% of all your money at any one time. All right, I've got a nice big lump of money in this demo account here, £122,000, so I'll be comfortable trading my 10,000 euro side and only risking $50. Brings me on to the next level then, margin to risk. This is how much you as a trader are actually risking. It's the most I can lose in this trade, and the way it does that is when it reaches a certain level against me and I'm running at a loss of $50, that'll be 50 pips below where we started. The trade will cut me out. It'll hit what we call a stop loss, and I'll have lost my $50, but no more than that. So when I've got my amount to trade, 10,000 euros, I know that I'm risking $1 per pip, and if it falls down 50 pips, I'll be $50 in the negative, at which point easy-forex system will save me, and it will get me out at that level, and I've lost $50, but no more than that. Okay, we have guaranteed stop losses on our platform. Other brokers, you might find it slips past this, and you lose 55, 60, sometimes a lot more than you are willing. But we have guaranteed stop losses on our platform, so you cannot lose more than what you're putting in, cannot go past your stop loss. So the stop loss, it does exactly what it says on the tin. It stops you losing, okay, more than you wanted to. So I'm happy with the direction. I'm happy with the amount to trade, okay, 10,000 euros, sort of $1 per pip, and I'm happy with my margin, $50. It converts it for me down here, tells me that I'm risking £30.54 in English money, because my account's in GBP. If I'm happy with that, I'm then going to press trade now and execute the trade. As you can see, it's very swift. It tells me what I bought, 10,000 euros. Okay, so I'm very rich if I want to travel to Europe all of a sudden. But I've also sold $13,668, which I've handily borrowed from the ether. Now I've got 10,000 euros. If euro exchange rate, okay, if the euro strengthens against the US dollar, then my 10,000 euros will be worth more dollars. I'll have more than I borrowed, and that will be my profit. If it weakens, then the 10,000 euros I have are worth less dollars. I'll owe more than I have, okay, so I'll have to put in some dollars of my own money, and that will be the loss. And you can actually see, if you scroll down, the running profit and loss on that trade. Okay, now when we first open, we're always immediately in a negative. This is due to the difference between the buy price and the sell price. Okay, when we open at the buy price, but when we close, we have to close at the sell price. So we lose the difference between the two. Okay, and that's equivalent to 3 pips here, which is, as we know, with a 10,000 euro trade size, $3. So we start off $3 in the negative. It's also skipped an extra pip, I think. Since then, it's gone 4 pips now, so we're down $4, which is about £2.44. Well, exactly £2.44. I can click OK here, and I can clear it just in case I want to set up a new deal all of a sudden. So that's what we've done. We've opened a deal in the correct direction. I've looked at the chart. I've thought that it's going to be going up. So I've got into a deal, and if it does go up and does what I think it's going to do, then I'll be making money. The next thing you want to decide is, where actually should I get out of this trade? It's all very, very well getting into the trade and feeling happy with oneself, but where do you get out? Are you going to get out really quickly when this just turns green and I get £1 or £2 profit? I wouldn't advise it. Okay, it's not a good idea to be taking lots of small profits. You tend to get emotional with your trade, and you just like winning. Okay, you tend to get addicted to winning rather than actually looking at what's happening in the market. What about if it goes against me and keeps falling and gets more and more negative? I'm just losing more and more money. Yes, I've got my stop loss at 1.3618, but the system told me to put it there. Okay, that might not be accurate. I can modify that and change it and bring it closer to reduce my risk, or I can move it further away if I think the trade needs more room to breathe. How do I decide where to put those? Firstly, I could look at a chart and decide, well, okay, so if it drops, down below here, I'm going to be a bit scared down below one of my lines, and I want to get out. Maybe around about 1.36, I'll be really scared. It just keeps coming down and down and down. It's not doing the turnaround that I thought it was going to do. And at 1.360, I'd like to get out of the trade, please. What about if it comes up? Well, last time it got to this price here, 1.3817, the two tops here. Both times it got there, people started selling euros and actually pushed the price down. So it's reasonable to assume that humans will repeat the process, and if it gets up to that price again, there'll be a lot of sellers entering the market, and you could see the price fall. Okay, so that would be a good place to get out of the market. I don't want to be in the market when I think it's going to drop down again, because my trade's going to be worth less and less money. So I'm already in the trade. I'm making money as it rises, but if it gets up to 1.3817, I'm going to get out on the profit side. I'm going to take a profit at that level. If it keeps coming down, I'm losing money. I want to be out of this trade by the time it hits 1.36. Now I need to go to my trade. I can click on modify, and I can tell the system, hey, look, system, get me out at these levels. Okay. The stop loss I had with my $50 was at 1.3618. If you've been trading a bit, you know that if I extend this lower, I'm actually less likely to hit the stop loss, but I'm risking more money because I'm allowing it to fall further. Okay, it can fall down to 1.3618 at the moment, but now it can fall even further and go to 1.36. Okay, so I've added an extra 18 pips movement, and because we're trading with 10,000 euros, that means an extra $18 risk. So instead of $50, I'm now risking 68. That's the maximum I can lose. It tells you down here that we're adding an extra $18 from our account. That's our free balance, and it even converts it for you. It tells you you're risking an extra £11. Next, I'll put in a take profit level. Okay, and hoping that it does get up there. Remind myself the top here was 1.3817. Type it in there, press calculate. It's going to tell me what I'm looking to make. Well, I'm looking to make at least twice as much as I'm risking. Very happy with that outlook. Okay, I'm looking to make $149. We're on a daily chart there, so it might take a few days to reach. Okay, but in this instance, I fancy my chances. Okay, and the mythical analysis that I've done. So I press accept, and as you can see, it's modified it, just confirms what we changed it to, and down below we can see we've got a new stop loss, we've got a new take profit, and it's in the system. I can close down my window, I can turn the computer off, I can walk away, I can go down the pub, whatever I need to do. I know that the easy-forex, the trading system, is going to take care of it for me, and it's either going to stop me out at the stop loss and I'll lose $68, or it's going to stop me out at the take profit and I'll make $149. Okay, so I'm very happy with that. I can walk away, but I don't want to do that particularly right now. Okay, I've got a bit more time left. I might want to do another trade. So we've shown one form of analysis, which is the charts, okay, which you might want to use. And I would say nearly everyone that uses that trades FX will use a chart. Okay, virtually everyone these days, even if they use news to help them with their decisions, they'll normally use the chart to help them with the timing. Okay, just because you think that euro-dollar is going to go up from the news or from a personal perspective, do you buy it today? Do you buy it tomorrow? Do you buy it later today? Do you buy it next week? Yeah, when is it going to go up and how long is it going to go up for? This is what you need the chart for, even if you're trading purely off the news. And you can zoom in at lower time frames as well and see what it's done more recently. Okay, if you need help with the charts, obviously feel free to give us a call or drop us an email and we'll help you with it. The other forms of analysis we have. On the website, if you go to the research and analysis section, you have quite a good selection here. Fundamental analysis, this is news reports, we'll be going through those in a minute. Technical analysis, these are trading signals from a third party we use called Trading Central. They're very, very good, very accurate, good analysis of what is going on in the market, what's going on the chart, and what might happen in the future. You have a list of these. They're released a few times for each asset class throughout the day. Let's have a look at one of them. For example, let's have a look at the dollar-yen. So I'm looking at the US dollar against the Japanese yen, US dollar, Japanese yen. The price tells me how many Japanese yen I get for $1 US. So that's 103 104.7 the pivot. The price currently 104.12 they've got there. I think that's pretty accurate. Yeah, 104.32 we've got at the moment. So it's gone up a bit since they produced the page. So we have ventured up a bit. Their suggestion is that the most likely scenario is that this pair is going to be moving up. It might drop down a little bit, but essentially we're looking for more bullish movements from the US dollar Japanese yen. What they're giving you here is a pivot strategy that you can use. Okay, a preference long positions above 103.7. That's the pivot. Long means you want to be holding the base currency so that you bought US dollar and sold Japanese yen. So when you're long, you're making money as the price goes up. So it's a good position to be in because they think the price is going to be going up. If they said go short, then you would have sold US dollar and bought Japanese yen. You'd be making money if it went down. The pivot strategy they use then, if it's above the pivot, you want to be long. You want to have bought US dollar. If it's below the pivot, you want to be short. You want to have sold US dollar. Right now, we're above the pivot, so they're suggesting you have bought US dollar and sold Japanese yen. You'll make money as it rises. If it goes below the pivot, then we want to switch tack and go the other way. We might not be at the screen. We might not like setting pending orders to enter the market below. So what we first thing we need to do is make sure that our stop loss cuts us out and gets us out of the trade when it hits this level. Okay, because once it gets there, it's a big chance it's going to continue falling. I don't want to be in my long trade losing money, losing money, losing money as it comes down to here. I want to get out as soon as it hits that pivot. So my stop loss is going to be at 103.7 when I enter this trade. What about a profit target? Well, we've got a high from yesterday, okay, from the FOMC minutes that were discussed. As you can see, it pushed it really high due to the news about tapering. Positive news for US dollar. And we hit a high of 104.35. And that is a reasonable target, but I think we can probably break through that and go for something a little bit more adventurous, the 104.6. Okay, so when you're trading, you can pick any of these good levels to take the profit. They're normally at resistance levels, so previous highs where the market is has a big chance of turning around. That's where you want to get out of the market. So we're going to buy US dollar, sell Japanese yen, take profit at 104.6, stop loss at 103.7. US dollar Japanese yen. I click on the buy button here, 104.33. Make sure I've got it the correct direction. I'm buying dollar, selling yen. I'm going to choose a 10,000 US dollar trade size. Now, working out the amount per pip is very tricky in US dollar yen because the margin to risk is always in the quote currency, which is Japanese yen. Okay, so we're looking at 6,000 Japanese yen that we're risking. How much is that? I have no idea until we look down here and we see, oh, it's £35.16. I'm comfortable with that. And if it moves down 50 pips from 104.36 down to this automatic stop loss is set me at 103.76, I'll lose £35. 103.76 is their stop loss. I'm going to go for 103.7, so it's going to be a bit more than that, a bit more than the £35, but I'm happy with it anyway. Click on trade now. It confirms what we've done. Bought dollar, sold yen. First thing I'm going to do to this deal is modify it. I'm going to put in the stop loss that I wanted, which is 103.7 exactly from the pivot. I'm going to put in the take profit, 104.6. Okay, so I'm going to be risking 6,600 Japanese yen. I'm looking to make just 2,400. Ideally, as a beginner intermediate trader, should be looking to make at least as much as you're risking. Okay, so not a great example. I'm going to go with it anyway. If you saw something like this, then probably it's not a good trade normally. Okay, I'm just going to accept it because we set it up now. So before you trade, before you even open the trade, always work out if you're getting at least a 1-to-1 ratio, if your profit target is at least as much as you're risking. Okay, by looking at your stop loss and take profit, which one is closer? Make sure that your stop loss is always closer than your take profit. Right, so we've opened two deals there. One we used the chart, another one we used third-party snapshot of the chart from Trading Central. What else can we use? We've got fundamental analysis here. Again, in the research and analysis section, I've got reports. One from easy-forex, EU morning report. Something that I personally normally send out to my clients. But you can find it on the website very early in the morning. Goes through what's been happening in the market. Okay, gives you an example chart of what might be happening on something. This is okay. This is suggesting a put option on gold. And we've also got the trading essential reports for some of the top traded pairs. Okay, and we've got some options, volatility maps if you like options. That's the easy-forex morning report. We also have one which I'm going to use here, Ubs Morning Advisor. So UBS, Union Bank of Switzerland, one of the top investment banks in the world, kindly give us every morning their report on what is happening in the market. Gives you an overview of what made the market move yesterday. So it's talking about the FOMC minutes, okay, which is I think Bernanke's sort of final hurrah as the Fed chairman. What happened to the market? Why it happened? Some of it's very technical. As a beginner, you might not be able to follow all of it, but the more times you read it, the more you'll understand, the more you get into it. However, the really easy part they've got here is the FX technicals. If you scroll down, telling you for each pair whether they're bullish, bearish, or neutral. Bullish, they're saying looking for buying opportunities. Bearish, looking for selling opportunities. Neutral, waiting to see what happens around the next support or resistance level. Let's look at maybe selling something now then. Australian dollar, US dollar, they're bearish. So if we want to follow in with UBS, what are they telling me has happened? The pair has extended its bearish pattern of lower highs and lows, opening the doors to new support at 0.8771 ahead of here. What I would suggest that probably means is we haven't quite reached 0.8771, but we're looking to get to it. And then if we get through that, we might be able to make it to 0.8545. However, if it comes up, we'll struggle to get through 0.8970. That's what support and resistance are telling me. So UBS helping me out a lot here. What I want to do though is take a look at my actual chart and confirm that I can actually see these levels myself, because I don't want to rely on a source without seeing the chart. So go to Australian dollar, US dollar is the 30-minute chart. Let's go a little bit longer, maybe a 4-hour. See what it's been doing. Again, as you can see, it's just been falling. It's hitting new lows all the time. Australian dollar, US dollar is not a very popular currency at the moment, and they're thinking it's just going to continue going down. Okay, so if we want to go with UBS, we're going to sell. However, we're wary of their support at 0.8771. We can't even see that on the chart here. Let's see if we can get it up on the daily. I doubt it, because we've been hitting new levels. Yeah, we can if we zoom out enough. 0.87. That's close enough. Okay, so this is going to be our target. If it comes down to here, they expect support, and it might have a lot of support, a lot of people buying at these levels. UBS have inside information on where people, well, not inside information, they have information of their own traders, what their own traders' setups are. So they might know, for example, that there is a big buy order at this level, okay, which is why they might suggest it as support. What about if it goes the wrong way? Remember, we're selling now, so we're going to make money as it drops. So our take profit is actually lower than where we started. So we're going to be profiting until we get out at our take profit at 0.8771. What if it goes the wrong way? UBS suggests support at 0.8970. Okay, so I'm going to put that in here. Okay, so if it comes up to 0.8970, we'll be getting out. Now we can quickly see that we're currently at 8855. If we go down to 8875 or 8870, okay, we'll be dropping down around about 80 pips. So we're looking for 80 pips profit. However, if we come up to the suggested stop loss, 0.8970, yep, 0.8970, from here, we're actually going to go up over 110 pips. So again, we're risking more than we're looking to make. I would suggest if you want to do this trade, go for the more adventurous take profit set by UBS, which rather than being 0.8771, is 0.8545. Obviously, that's going to take a lot longer. We might even be talking about weeks to get to this level. I'm on a daily chart, so it's very long term. Okay, but I think that's a better trade. It's a better looking trade. 8545. It's not even on here, but I am going to set it when I do the trade. Australian dollar, US dollar. Now we think it's going down. We're bearish on this. We want to make money as it drops, so I need to click on the sell price, because now I'm going to be selling Australian dollars and buying US dollars. So I click on the sell price here. I'm selling Australian dollars, I'm buying US dollars, I'm buying the quote currency, the second currency, I'm selling the base, the first currency. It means I'm going to make money as the price drops and drops and drops. That's what we hope for anyway. I'm going to do a 10,000 Australian dollar trade again. Default setting $50. We cannot adjust that before we open the trade, but I know for a fact I'm going to move my stop loss anyway. Now look, the stop loss is higher than where we're opening, whereas before it was lower because we were buying. Now we're selling. If it starts going up, we're going to be losing money. I mean, the stop loss needs to save us if the price is rising from 88.55. It's going up and up. So default setting 8905, and we'll be losing $1 per pip as it rises. However, the direction is correct, the amount to trade is correct. I'm going to adjust the margin to risk anyway when I move my stop loss, so I'm happy to trade. Trade is open. You can see it down below. First thing I do every time, modify my stop loss at the resistance, 8970. Going to be risking a lot more than $50. It's a fairly long-term trade. And I want my take profit at the second support, 8545. Okay, so I'm risking 115, looking to make 310. That's much better. Okay, I'm looking to make a lot more than I'm risking. I'm happy with that. Press accept, and hopefully within a few days to a week, it's going to have made it. Okay, so we're looking to make a bit of money on the Australian dollar, US dollar going down, as it has been doing for quite some time now. Last thing I want to show you, so we've gone through the charts, we've had a look at the technical analysis page, we've had a look at the fundamental reports. The last thing I want to show you is the inside viewer. Okay, this is sentiment analysis, something I use quite a lot in my trading and my analysis. It tells you the position sentiment of traders. Okay, have traders bought? Have they sold? Are they long or are they short? The inside viewer can be found via the research and analysis section. However, it's also available in quick form on your trading platform itself. Next to my position inside viewer here, I can click on direction, it's the most useful, and see which direction people are holding their trades. So at the moment I can tell, let's have a look at the Australian dollar, US dollar. At the moment I can tell that 73% of all trades with easy-forex, okay, 73% of all those trades are waiting for the Australian dollar to go up against the US dollar. So they're thinking that the next move here is up. Now, a sentiment analysis, the best idea for you is normally to go against an overcrowded trade. If everyone is sitting there waiting for it to go down, okay, it's not going to go that way. Imagine this inside view is always trying to get back to 50%. Okay, so if we look at the Australian dollar here, we can do it on this page as well. It's going to try and get back to 50%. Okay, that's where its equilibrium, its natural resting position is. So more people are going to be actually not buying the Australian dollar, but selling the Australian dollar and buying the US dollar to push that back here. Okay, and in that instance, you want to be against the crowd. So you don't want to have bought Australian dollars and be with the crowd. Yeah, you want to be against them. Study more, type in sentiment analysis and overcrowded trades, and you can understand it a bit more, or like I said, give us a call or email and we can help you with that as well. The inside view, a very useful tool, especially for the more liquid pairs, all the major pairs, Australian dollar, US dollar, Euro USD, dollar CAD, things like that, gold, oil. You'll find a lot of information. When it's overextended, say over 70% one way, it's telling you it's an overcrowded trade. 73 out of 100 people are sitting there waiting for it to go up. Now, if you pick one of those people to act randomly, most likely is you'll pick one of the 73 to act randomly. Their action is going to be to close their trade. And if someone who has bought closes their trade, that adds selling pressure onto the market, which will then push it even further down. Okay, so all of those 73% that have bought, some of those are going to change their mind. They're going to be exiting their positions, and that's going to add selling pressure to the market. Okay, and that's the more likely scenario to happen when you have a sentiment that's strongly one way rather than another. Okay, that's all I wanted to go through today. I'll give you 1 minute or so to ask her any questions, but other than that, like I said, you can contact us at the easy-forex by phone, by email. All the contact details are on the website via About Us, Contact Us. Thank you.